Hey guys, how you doing? Anyway, the market had a pretty good dip for the day. Everything's pulling back. All the indexes are pulling back somewhat. The SMH, the semiconductor ETF, did okay. So ETFs, rather semiconductor sector, is still doing well. But you look at the overall market, there was a rotation into more of a defensive area. If you look at XLE for energy, XLV for healthcare, XLP for staples, and XLRE for real estate. Interestingly enough, despite the 10 years, some other yields going higher, is up slightly. So everything else, so every other sector was dropping for the day. Now, I didn't want to get aggressive because I have levels that I'm going to be in on the indexes if we get a sustained pullback in the market. And I got to zoom out to a monthly chart because I got to see where I'm at as far as, okay, not the monthly. Let's try the daily maybe or weekly. Here we go. So before I even begin to get aggressive on this market, I would have to see at least a 10% pullback. And that put it somewhere down where I got that first trigger point at 684, where that support is, that rounding top before that pullback. And in that range between that last topping pattern, we pull back from 680, 680 or 690 something, and we drop down to that low we had back in, what was that, April? Yeah, April. Now, if we're in that range, that's where I'll get aggressive on anything a SPY related, S&P 500 related. Now, the NASDAQ, looking at, see if that's in the monthly. Let's look at the weekly time frame on that. I zoom out to the weekly during pullbacks, generally speaking, and I'll look for the market to pull back at least 10% before I start nibbling at things. And looking at the NASDAQ, naturally probably go down further if the S&P could drop. So I'm looking at 616 area, maybe a little bit above it before I start nibbling at anything or getting aggressive. I have been trading stuff. I got a lot of current trades, and I got my dividend portfolio where I nibbled at some stuff that was crypto related. But what I would buy or trade during corrections are the following: MAGS, OVO, XQQQI, TDAC, T-SPY, DRAM especially. DRAM has been an outperformer, man. I couldn't believe it. I bought it at $37.23 a share for 100 shares, and it just keeps going up. And when I bought it, I immediately sold a covered call. Ended up having to roll that covered call out, and it's deep in the money currently at a 38 strike, and Dramas is trading at 69 at market close. It keeps running up exponentially. Semiconductors have been on a whirlwind. Now, something I decided to trade currently on my current trades last night, because I decided to go on the marijuana ETF. Basically, this holds a bunch of stocks relative to the marijuana. I'm not particularly bullish on marijuana, but if you look at the option table on this, because it's high beta, I go out toward the first month of next year on my option table, and I'm selling at a $4 strike, almost at the money. Share price is $4.74, and I got filled for two contracts at $72 a contract. If you look at that 0.72 on that $4 strike, you got to times that by 100 whenever you do options, because each contract represents 100 shares. Excuse me, guys. That's something in my throat right now. Anyway, so I made $72 per contract. I'm going to average up in premium if there's a further dip, and I might even drop the strike price down to $3 at some point. But look at that liquidity, what you got there. Bid and ask are kind of a large gap between the bid and ask, but if you look at the amount of open interest and volume, the volume is low for the day. It's just basically me, two other people that traded it. But if you look at the option table, open interest is really good on the contract. So you get filled, but you got to use limit orders. If you look at the bid being at 0.63 and the ask being at 0.87, you want to be somewhere in between or toward the higher end of that. So I put limit orders all the way up to 80, wasn't getting filled, stepped down to 72, got immediate fills at 7. Well, not immediate. My second contract didn't get filled for like 10 minutes. So I use a limiter to sell cash secured puts at this point is what I'm doing in marijuana now. Like I said, I'm not investing in this; I'm trading it. So based on the fact that implied volatility is so high on this, let's see if we look at a closer date option. I'm going to show that 84% implied volatility. The options are very liquid on this exchange traded fund. Now, there's a chance it goes a lot lower because if you look in the past on MSOS, it's been down all the way down to $2. Would I average down? Well, of course I would because it's very liquid. I would use the premiums to buy other stuff. I'm not really concerned about it going much lower than about $2, but if it did, I'll just load up on it with options though. So if I did get a sign, it'd be at a much lower cost basis. Like I said, I'm not bullish anything related to marijuana, but this is a highly traded ETF, and that's why I'm trading it. So I'm not going to do any analysis as far as like fundamental analysis on each holding on this particular exchange traded fund because I really don't care. I'm just trading the beta of it. The beta makes that implied volatility spike because this thing is, if you look at the chart, is all over the board. It could spike up either way. It could go up exponentially, and if it did, great. I just made a bunch of money. If not, I'll keep trading in that $2 to $4 range because that's where it seems to hover. And so, like I said, I'm not particularly bullish on it. I've traded NASA, so the cash here put on that. It's an ETF holding a bunch of space type junk stuff. It's got exposure, I guess, to the SpaceX thing coming out. It's got some exposure to that and owns Rocket Lab, Planet Labs, Intuitive, and the options are pretty decent on it. Now, I don't really want to own it, so what I did is I went out to the 17th of July. I think I sold the 23 strike. Take a look. Yeah, I've been selling the 23 strike. So I forget what I picked up. I picked up like 40 odd bucks on it, but it's going higher now. And it pulled back a lot today, over almost 7%. So in addition to that, I've traded grab with cash secured puts. I got a few contracts on it. Wendy's is dying. I got an $8 strike cash secured put, and that's way underwater currently. So I'm going to see where the bottom is with Wendy's. Now, it bottomed out previously down to about 6.5. I'm not ready to take a dip because it's a strong red candle on it, so I'm going to wait to see where, if it breaks that previous support down there around 6.5. And if it does, I'll look to see where it might bottom out, and I won't go in on it unless it does a reversal. The reason I trade a Wendy's is not because I'm a particular fan of the company. It's because they got a catalyst of being taken over from another outfit. If that happens, the shares will trade at a premium when they decide to buy out and if they take the company private. So that's why I trade. I trade as an arbitrage trade. I'm looking at DFIN. I haven't traded yet. It's defense ETF. I have traded G-Link relative to Chainlink crypto. It's basically an ETF for Chainlink. Ford, I did really good on Ford. I got a call option on it. I'm going to lose my shares likely, but I would have made money on it if I do. I'm trading American Airlines. I'm out of the money on that one. I'm trading the $11 strike on it. Strategy, I picked up the STRC fund. I'm picking up shares of that during this pullback on crypto. I've got 30 shares currently, and I'm going to dollar cost average it on the way down, and hopefully there'll be a bottom pretty soon. It trades at par, and it pays. Basically, usually it trades at par, which is around $100. That's par for it. It's kind of like a bond almost in a sense, because you're guaranteed to be reimbursed at, I think it's $100 if they decide to redeem this at all. And don't quote me on that. But anyway, it's around 11.5% on the dividend, pays monthly. I'm going to trade it, not till I'm blue in the face, but basically I'm going to pick up more shares. When Bitcoin, if we look at Bitcoin, let's pull up the chart on Bitcoin. Bitcoin's going to get pretty low if it continues downward. So I'm looking at pulling out on it. I'm looking at the lows that we acquired back in January, around 60K. So I'm marking that as a territory where I'm going to see what price does at that point. If it breaks below 60K, then I got to look for a support, and I go on larger time frames. So I'm looking between that 36 to 60K level. If Bitcoin breaks below 60K, that's the range you're going to be trading in, picking up more shares of STRC. I'm not trading Bitcoin directly. I'm using proxies for Bitcoin. So with Bitcoin to the proxies, I got a few proxies actually relative to Bitcoin, and we'll pull up my crypto trade. So what I've been doing is I've been picking up STRC, and with Ethereum, I decided to pick up NEHI from Neil's funds, and they're both dividend payers. That's what I'm picking up. What's interesting to me is that some of the crypto miners were holding up pretty good. If you look at like CleanSpark was actually green on the day, and looking at Mara was down slightly, but relative to what they used to do in the past with Bitcoin drops, they're holding up pretty good because they're now rotating to AI data center build out. So that's given them some momentum at times. Blocks has held up relatively well. It dipped today. It has a lot of different funds in it besides just crypto exposure, but they're all basically our old crypto exposure. If you look at what they trade in, Hut 8, Corporation, Right, Platforms, Iron. But those companies, those three on the top, have been rotating to AI data center build outs now and coming in agreements and whatnot, and they've had positive momentum. So I do trade blocks. I own about 350 shares of it. I was going to take profit recently on it, decided to hold on because I like that weekly dividend. Now it's close to my cost basis, so I will probably likely use whatever make in option premiums and dividends to buy the dip. And like I said, the dip for me for anything Bitcoin or Ethereum related, I look at where Bitcoin goes because basically where Bitcoin goes, you're going to see the like type price action with Ethereum. So I'm looking at these levels, like I said, what happens at 60K from that January low we hit, and see what price does at that point. Now, if it falls between like 36 and 60K, I'm going to be aggressive, and I'm going to hold this stuff I buy long term on my Bitcoin proxies. Anyway, that's what I've been doing in the market. Like I said, if we get a deeper correction on those levels that I pulled up, let's look at the triple Q real quick on the level I pulled up on the weekly chart on that. If we get it beyond a 10% pullback without nothing having changed as far as the job numbers in the market or anything else or rate sensitive stuff, I'll be buying at around 620, 616 area on that consolidation for that previous sell off we had. I'll be buying aggressively because nothing's changing the narrative of AI in particular. Semiconductors are still strong. They're still going to have demand. There's still a lot of money, billions of dollars, in fact, going into the AI build out. So if there are dips, in my personal opinion, they should be bought up. That's just my opinion. So if we get pullbacks in the NASDAQ to that level, what I'm looking to trade during a deep enough correction is the following: MAGS, OVO, XQQQI, TDAC, T-SPY, which I'm very fond of. TDAC has done really well for me. DRAM has done really well. I wish I was more aggressive, and I'm waiting to see if we get a pullback in semiconductors. If that happens, I'm going to go aggressively into DRAM, picking up shares or trading options on it. And another one I have listed on there is Brund, but that's an individual company. DRAM is an exchange traded fund basically that holds Korean funds in addition to MU, Micron. So if you look at its hold, you can see Micron, Samsung, um, SanDisk in there. So it's pretty narrowly focused, but these companies are going to have demand up until probably well into the end of 2027 at a minimum. So unless they get something to replace semiconductors of this sort, the likelihood that this gets a significant pullback, that will just basically create a buying opportunity. All right, guys. I'm going to cut out here. Breakfast is being served in a second. I'm living in the Philippines, and I'm doing it with dividend income. And I basically don't spend any of my premiums for my options, and I just let that money stack up. And that's what I use to buy the dip a lot of times, in addition to having a cash reserve. All right, guys, take care. Bye.